There's been a lot of talk about politics, and rightly so, from Rivers politics to Labour Party politics, national politics. But, politics is meant to be a means to an end, not an end in itself. It's meant to deliver policies for good governance. So how well have we done in that sense, delivering the dividends of democracy, particularly in the area of economy? We're joined on the program this morning to take another look at Nigeria's economic health, I shall say. Dr. Biodun Adedipe, founder and chief consultant, BAA Consult Nigeria. Dr. Adedipe, you're welcome to the Morning Brief.
Thank you so very much. I'm happy to be with you this morning.
Absolutely. I wonder for you as an economist and perhaps your colleagues, when you see, and I want to start with the political situation in Rivers State so people can get a sense of what this really means. When you see political crisis, the back and forth, what exactly is usually the real cost of this? Because what people look at most times is they focus on the political actors and then, the back and forth. But then there's a real economic cost to the political crisis, the economy of the area, employment, business activities. So when you as an economist, when you look at, let's say, the crisis in Rivers State, for example, what is a real cost to the people of Rivers State? Then we'll talk about the bigger conversation, Doctor.
All right, thank you so very much. I think the first thing that comes to my mind is the disruption that brings to economic activities. That means, to start with, economic agents, talking about individuals, corporate entities, and even government also, because many agents of government also facilitate, economic activities. So once what they do on a daily basis is disrupted, that is the beginning of trouble within that particular space. And the way it goes is that when we see a crisis, typically we track it in the manner of it destroys economic activities. If that is not corrected as quickly as possible, what will that also mean for people who are unable to go about their normal businesses? And then if they are unable to do that and it goes into an extreme, they become what you call humanitarian candidates. So where are the safety nets? If there are no safety nets, it means it can also blow over into a security crisis. But that is the way we normally trace any disruption to economic activity. So in my mind, this is a major issue, and the economy is fundamental because it connects to livelihood. It connects also to the ability of people to have a sense of security, that is not only financially, but in terms of everything that defines their living. So basically, that's where it starts from. Then we can now take it further and now look at the implication of that for tomorrow. Because anytime, the way we say it in economics is this: the actions that we took yesterday and the implications of them are what we experience today. And in the same way, the choices, decisions, and actions we take today will define our tomorrow, which means it's not just about disruption of economic activities today, but also looking at the implications tomorrow. It means we need to restart those activities, and whichever way you look at it, depending on the nature of a business, it might mean disruption lasting longer than the number of days the political crisis itself that triggered all of this will last. So in which case, the economic effect will last longer than the report or the political crisis that triggered it.
Indeed, because you realize that eventually the government will have to draw funds that are meant for other things, to fix those places that have been burned and all of that. And I think it just reiterates that point you made. So I think that it's mind-boggling that while, states, political actors see the very present challenge, the economic challenge, they still have time to engage, in political brickbats and the rest. When there's almost a sinking ship they're on, you just wonder what the thinking is like in those settings. But let's set the agenda, and that's why we're doing this. The economic indices don't look too good. Some will tell you capital importation increased year on year, but when you look at it quarter on quarter, it's been a decrease, right, at 2.6. That's what we had in the second quarter, and that's down from $3.37 billion. So depends on how you're looking at it, but clearly this is not where we ought to be. And there have been questions about, so is the government really aware of how much effect Tinubunomics, floating of the naira and all of that is having on the economy, or they're saying we'll get better by the day. Let's just keep holding on. So again, when you look at the economic indices, do you get a sense of it gets worse before it gets better, or hey, we need to change the strategy altogether?
All right, thank you so very much. Now, there's what I call my macroeconomic dashboard, and that is what I rely on in interpreting what is happening in the economy and what we may expect tomorrow. Now, you made reference to capital importation, which is very vital, especially as an outcome of how our economy is interacting with the rest of the world. That's looking at the external sector. Now, first quarter of this year, $3.38 billion, and the second quarter, $2.6 billion. When we put that together, that is almost $6 billion US dollars at first half year of 2024, significantly above what we had for the whole of 2023, of course, above what we had in the whole of 2022. So if you look at the trend, and I always like to encourage analysts to look at trends rather than the spot data. If you look at the trend, what it shows is that Nigeria is making some progress in that respect. But at the same time, I will now bring in a word of caution, where we now look at the breakdown of that particular figure of 3.38 for the first quarter, of 2.6 for the second quarter. What is the predominant contributor to that figure we are looking at? Mostly portfolio investment. And that is where it connects to what we started our conversation on, a political crisis. Now, the way it goes is that portfolio investments will come in when they see reasons that are rational, so to say, because investments are rational. So they go to places where they are safe. First consideration is safety when people invest in a particular geography, Nigeria being the one we are discussing. Second consideration is now the return. Third one is liquidity, which means how easy will it be for me to take out my money when I need it. So in which case, they also look at the liquidity of that market. So, and if that is improving, and of course, I will probably, if I happen to be an investor or advising someone to do that, I will look at the external results. How is that behaving? Do you have any unextinguished, obligation that is still outstanding? How does that compare with your liquid, external reserves? Then I go on also and look at your external trade. What portion of your imports, if I compare that with your liquid external reserves unencumbered, how many months of your bills will that cover? So when I play all of those, and then the nuances coming from government in terms of what you call key government functionaries and their utterances. So all of these define the confidence that as an investor I will have in such environment. Now, if that confidence is sustained, then I will leave my money in that geography. All right. Once there's a question mark on that confidence, then I will look out. So it's not something Nigeria can begin to beat our chest on, that, oh, thank God, capital importation has increased significantly compared to the last maybe 5 years, that we are doing well. Yes, we are doing well. But when you look at the composition, it should give you some concern in terms of how to retain such money in the environment we find ourselves. We then move on to other metrics. Okay, the economy is growing, no doubt. If you look at the data in the last 12 years, there's an upward trajectory in the trend. But it is not growing fast enough. That's the first challenge. Secondly, it is not growing inclusively. Now, the reference to inclusive growth is about employment. We are not creating sufficient jobs to make an impact on what we call the bottom of the pyramid, okay, where the real problem is. So in which case, we want to grow faster, no doubt. We want to also grow in a way that will create jobs. And so the question will be, where are the jobs created? Portfolio investments don't create jobs. What creates jobs are foreign direct investments and also domestic investments in the real sector. And that now brings us to some other metrics. Now, inflation rates has gone very high. But happily in the last 2 months, July, August, it has trended a little downwards. But the question is it sustainable? But there are three key words. We run through all these metrics. If it is positive, is it sustainable? Then is it sustained? And then is it inclusive? Those are the things we use to measure an economy, whichever angle we look at it. So if we look at the inflation rate, yes, it trended down. Then the question is, why did it trend down? Of course, we know harvest season was some major local staples. So, and the influence of that in the market made prices to down. Yes, please.
So speaking of what is sustainable, do you see a synergy between fiscal policy and monetary policy? And we could just, mention one or two examples. The flip-flop seen in import tariff as it impacts on, businesses in that sector, particularly those importing cars and other related items. And then that's on the one hand. And on the second hand, the reduction of VAT on key items that was announced recently. Is there any synergy in that? And in the long term, are you optimistic that it will, engender a form of stability in the economy, such that all of these other opportunities that you're talking about will be, will be encouraged to grow?
Yeah, I think most of us analysts, we mix up something here. When we talk about an alignment between fiscal and monetary policy, there's a major one that you mentioned now, we always leave out, commercial policy. There are actually three major policy planks in managing an economy. So now the commercial leg is what you mentioned now. That is with tariffs, import tariffs, okay, even export also carry some elements. So, and that is where also you look at the place of the exchange rate you use in computing import duties. Now, that falls strictly under commercial policy. Now, commercial policy alone can play a big role, and I'll give a simple illustration. Let's assume that Nigeria wants to encourage local manufacturing of shoes, just for illustration purposes. Now, if we want to do that, the proper commercial policy will go in this direction, that we increase the tariff on imported shoes and then reduce the tariff of any components for local shoe manufacturing that is imported in such a way that by the time the one produced locally hits the market, it will get to the market at a price that is competitive relative to those that are imported. That is the way commercial policy is managed. So we call it an alignment of commercial policy when it comes to the external sector. We don't talk much about that. Now, the fiscal side, in all reality, there's been some good response on the fiscal side. Fiscal side looks at three major things. One is the government's revenue. The second is government expenditure, their spending patterns. And then the third one is what you also referred to, and that is the one relating to tax and other elements in the fiscal policy. Now, tax system and structure, they are two different things, must be designed in such a way as to incentivize production, local production. And I'm happy you mentioned that. Now, the direction the government is going with respect to fiscal and tax reforms, for me, is excellent. But we need to get it through the National Assembly, as the President has said the bills now, and also ensure that we implement. It is one thing to pass the bills into law, have the act signed, but implementation is the critical element. So if we're able to successfully implement this, we are getting in the right direction where we see fiscal policy now complementing monetary policy. Now, for monetary policy, one of the areas that I feel we have not done enough is the exchange value of the naira. Now, for me, willing seller, willing buyer, this is good as a choice. But what are the preconditions? And that is where the real challenge lies. The preconditions will include a robust external reserve. We have done well there also in terms of how it has grown in the last 1 year. Okay, it is in the right direction, no doubt. Equally, having extinguished some inherited matured obligations, that's also in the right direction. Okay, that is fine. But when we play that against our import bills of about $2.99 billion monthly, so we see also a comfortable cover, as we call it, But the real question there is this: is it sustainable? Now, pick a few examples. Now, some 2 years ago, February 2022, Nigeria, Pakistan, Vietnam were in the same position with remittances by diaspora citizens. But between then and now, Pakistan has unraveled and they are in currency crisis. Vietnam also is struggling. Okay? Nigeria had its own experience as well. But as of today, things have changed a little bit for Nigeria. And if you look at, for example, at the recent FGN, diaspora bond, dollar bond that was issued, oversubscribed by almost 100%. Okay, that is a pointer that yes, Nigerians and investors see Nigeria as a good geography to invest in. Also looking at sovereign risk. Sovereign risk now relates to government policy changes. So are those policy shifts in the right direction? The interpretation, in my view, for those that put out over $900 million to invest in that is also positive in a way.
There you go. So looking at the figures yet again, dive deeper, you see that revenue from FDI for the same period dropped to $29 million. And I think it maybe speaks to the point you were making about portfolio investments versus FDIs. One doesn't create jobs. I know there's that debate about, okay, when the money comes in eventually helps companies expand and creates jobs, but hey, they can always take their money back and the company is back to square one or even worse. So clearly the figures don't look too good, particularly when you compare it again to the same period. And I'm talking about revenue now from FDIs compared to the same period from last year. But let's bring this home, right? Because for economists, you see the dashboard. But for Nigerians, they see a little part of the dashboard, which is their own pocket. So there's macro, microeconomics, and there's my economics. Pardon me to add that to the list of, the different angles. So I'll speak to how we can then begin to make this reflect in my economics, the economics of the average Nigerian. And what they look at, for example, is still the price of food items, the price of petrol, the cost of living, the cost of rent, and all of that. And they expect that government is able to rethink revenue generation such that it's able to provide infrastructure, right, to ease life for Nigerians. And I want to get your assessment of the government's performance in that area so far, particularly looking at what eats the most of our earnings, right? And makes, the take home, not able to take us home or take us halfway. So what's your assessment of the government's performance in that sense?
Well, my assessment is that we have just moved a little, and I will explain that. Now, the core element when it comes to inflation that impacts cost of doing business on the one hand, and also the cost of living for the private, resident. I don't want to use the terminology Nigerian. Okay, not only Nigerians reside there. Now, when it comes to that, there has been a little dampening in food inflation, which remains the major element driving our inflation. So the question now is, has the government acted in a way that will bring that food inflation down? Yes, they've introduced some policies. They've taken some action. But the government needs to intensify action in two ways. One is what I call the low-hanging fruits. And this is not only about the federal government, the state governments as well. In fact, for me, the state governments play a bigger role than federal government in this regard. In the sense that if every state will look back into agriculture, we see a couple here and there that are making some good efforts in that direction. And then we pay attention to those staples that Nigerians consume mostly. If we are able to cultivate those staples in large volumes, and we depart from the traditional rain-fed farming that we've been doing in Nigeria, and now move on to all year-round farming. I was having a conversation yesterday evening with my wife and a few other people on this issue. And I said, nothing prevents us from having 12 cycles of cultivation, even if it's a particular produce that has gestation of 3, 4, 5, 6 months. Now, if we cultivate on a monthly basis, the harvest will also follow serially when we get to the harvest season. So those ones are the low-hanging fruits. So if the governments will now invest in that space, I expect them to invest in irrigation infrastructure, also invest in processing infrastructure, and then storage. So that way we can deal with the menace of estimated 60% of post-harvest losses we experience in Nigeria. That's on the one hand.
Right.
Now, it means, for example, that you can cultivate no longer be July, August, that impacted inflation rate this year. Okay? I brought it down a little in July and August. But you now be a monthly thing that is happening because you are cultivating it year round. Same thing can be done to other staples. All right? Now, yeah.
All right, I just want us to quickly touch on another point, which is focusing more on the monetary policy side of the current administration's disposition. Help us understand the regular stress tests that the CBN says that banks are being subjected to in order to ensure that the liquidity of depositors are safe. And this is vis-a-vis the banks increasing lending from the CBN.
All right. Now, very good question. Ordinarily, the banking sector is said to be a crucial one to the economy for this simple reason. Banks by nature are significant public entities. It means once the door of a bank is open, people have the confidence to go in there, place their money there, go there also from time to time to borrow if there's a need, and they pass the risk acceptance criteria of the banks in question. Now, that means that the doors of a bank open is an indication that the central bank has given that bank a deal of health. Let me say, sound health. So to that extent, therefore, central bank will want to ensure that on an ongoing basis, what it has allowed that bank to do is in line with what exists. It means public confidence in an open bank means that CBN also has seen that bank as healthy and allowed it to keep its doors open. So it's a regular thing to do what we call stress test for banks, especially in times of crisis and when there are also challenges within the domestic economy. That is a normal part of central banking. All right. Now, the other side to it is liquidity. Now, liquidity is at two levels. There's a difference between liquidity within the banking system and then liquidity in the economy. But the challenge of central banking is that the banks are part of its transmission mechanism. That means whenever central bank comes up with a policy, it directly impacts the banks, and so the banks also in turn will impact the economy. When the CBN raises the monetary policy rate, for example, I call it signal rate. When it raises it, it's a signal to the banks to make loans more expensive. In which case, we have seen that the system is too liquid. We want to suck in some liquidity. So make lending, that is loans, more expensive. Right. So that will reduce the rate at which banks push out money to the economy. All right? So, and that is the way it goes. When it goes the other way also, is to release more liquidity into the economy.
Right.
So that everything works for the banks.
I really hope we're able to get around this liquidity challenge, because there are lots of businesses that could use that little loan here and there. And a lot of them say it's really tough to access it, right? Sure. Particularly when you look at the profits before tax that at least 12 banks declared in half year 2024, 3.8 trillion naira. So maybe we need to find creative ways to rechannel that money, plug it back into the economy and ensure productivity. But Dr. Adedipe, clearly a job of work ahead of government. And I must say at local, because we're seeing local government elections, at the state, so hopefully we don't see the political crisis, sit at home and the rest, and at the federal government. But we have to anchor at this point, but clearly this is an ongoing conversation. We'd like to thank you so much for your interventions. Dr. Biodun Adedipe, founder, chief consultant, BA Consult Nigeria. Thank you very much.
Thank you for having me.
So we've talked about the micro, macro, and my economics, but clearly we'll give you more as the days progress. But we'll take a moment now. When we return, we'll turn our attention to yet another crucial part of our life as a nation, and that's education. So amidst all of the back and forth politically, what are states, the federal government doing about education, and what more needs to be done? That's in a moment. Stay with us.